Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. Well, it's Wednesday afternoon, and I wanted to go over my current buy recommendations. One rating change today on Brazil. I will chapter this video so you can fast forward to that if you want, but I'm going to abide a neutral rating. And I'm also going to just show you as a CMT, a chartered market technician. Um, My specialty is pattern recognition. That is my focus. I look for pattern breakouts. And this is one that I'm going to show you two of them that you've seen a lot on this channel and try to maybe it'll help it make sense to you. But the reason why I buy pattern breakouts is because I know exactly where my risk is and I know what my potential reward is, and I can determine whether it's advantageous or not. So this is a bullish pattern. This is like a man or woman hanging upside down with the neckline, the left shoulder, the head, which is lower than the shoulder, of course, and then a right shoulder. And you want the two shoulders to have some symmetry to them, even though this one isn't perfect. I got this from Investopedia off the internet. And so all this is telling you is that, you've got one, two, three, four touches on a resistance line. So that's a very important level for some reason. And, so when it forms the left shoulder, you have no idea what it is yet. You should actually see you actually should see bigger volume on the left shoulder. On the head, you should see a little less volume. And on the right shoulder, even less volume than that. And yes, you should see a big uptick on the breakout in volume. So once that happens, I know my risk is right at the bottom of this big bar, right? Where all these people wanted to buy. If that ever reversed, then I know this is a failed pattern. So I'm going to put my stop, let's just call it at, I don't know, 9.5. And I measure from the bottom of the head to the neckline and I project that distance upward and I come up with 11.5. So then I take 1.5 divided by one, and you have not a great reward to risk ratio. It's only what, 1.5 to 1, I guess it would be. So I like mine to be 3 to 1 on the upside. So I would need a much deeper head on this to make it attractive to me. So I just wanted to say when I talk about inverse head and shoulders pattern and pattern recognition, I'm a CMT, a chartered market technician. I don't know, there's probably 12,000 in the world, I'm guessing, at this point. I haven't checked that in several years. And I like to focus on pattern breakouts because I know where my risk is and I know where my reward is. Here's one more pattern. This is one you hear me talk about a lot. This is a symmetrical triangle where these two converging trend lines, after a big up move and an uptrend, it gets way overbought and you get this sideways price action, and the bulls and the bears are fighting it out. And as a market technician, you want to get out of the way and let it do its thing. And then on the breakout, you're going to measure the base of that triangle and you're going to project that distance upwards to get your price projection. Brazil, one that I'm changing my rating on today from buy to neutral, it was a 7-year symmetrical triangle. So if you didn't know about patterns and pattern recognition, you wouldn't even know that that was a really substantial breakout. So those are two patterns that I talk about. So here I would have put my stop probably here, but beneath this last touch on the support line, and off we go. Okay, so let's get into the buy recommendations. We got Bitcoin, we got Antero Resources, which reported after the close. I didn't see what the earnings were. I did see it was up slightly and after market trading. So I think, we're okay there. Never like holding stocks when they're reporting earnings. Platinum has had some weakness. Silver, the metals have had some weakness. I'm still staying with buy ratings. Caesar Entertainment, the iShares Commodity Index, GSG, 70% energy is doing great. Brazil going to a buy to a neutral. Union Pacific and shorting technology, which has been an error, but I'm trying to work my way out of it. So here we go. So here's Bitcoin. So you can see the big downtrend. I mean, this thing is down from, I don't know, I think 100 or something. So it's lost a lot of its value. And luckily, we didn't own it then. Owned it a few years ago, made a lot of money on it. Of course, looked for a pattern I could buy. And so prices broke up here, and we have a confluence of moving averages all coming together in the form of a bullish rainbow convergence. And prices did a type 2 convergence where they came back to that. And now, if they hold, they're challenging that today. I bought more today. It's down. I buy things on red, I sell when they're up. And, um, if it breaks, I have a broken blood vessel in my eye. If it breaks 32, then I'm out of this. Okay. And I bought at 33.18. So my risk is 1 point, which is about 3.5%. But my potential upside is a new higher high. Um, 42. So it's a 4-to-1 reward to risk ratio, which I think is really, really attractive. I will attach the initiation of the buy above, so you can look at that. Antero Resources. So this is one that's been a real hard one, but we've made money, but we've had to buy and sell this several times. So Antero Resources, this is mainly natural gas, but it does have some oil components too, like all energy companies. And so we had the same kind of rainbow convergence. This is an intraday chart. Each bar represents 2 hours of price action. That was the same as what we saw on Bitcoin. So this is short-term stuff. This isn't a 7-year bullish pattern like in Brazil. So when we got the retracement back down to this, if it held, then I was holding the position. If it broke our stop at 37, I'd be out. But since it held, it promised a new higher high. So on a very short intraday uh, situation, we now have this fulfilled. So should we still be holding this? Well, that's a good question. Let's look at a little bit bigger chart that goes back more than 2 months. And this is the daily chart. So on the daily chart, you can see the last time I bought and sold this, I bought it here at, let's call it 35, and I sold it up at 40. Hopefully you guys participated. We had uh, uh, um, a bearish engulfing pattern, and it corrected 10% in 2 days, and that gave us a 38% retracement, which is a Fibonacci retracement level. A great Italian mathematician, I'm not sure of the century, and it continued to go down. So now I'm stuck in this thing, and it gapped down in a big way. So I'm like, well, you know what? We got a rainbow convergence coming here. This is a bearish rainbow convergence because price was below the convergence of moving averages. So either it would sit here till the moving averages came down, a type 1 convergence, or it retraced back, a type 2 convergence. And so what was I doing here? I was buying more. And again, I sell on up days, and I buy on down days. And so a few days ago, I guess it was Friday of last week, we ended up right up at the confluence of moving averages, the bearish rainbow convergence. And so what did I do there? I sold some, but I kept a good amount of my position, most of it. And it was able to break out of this the last couple of days, even though this is called a shooting star, where prices start the day at the bottom, shoot up intraday, and then close at the low. You don't really like to see that. You'd like to see some follow through. So we're still in this, but it's not, it's not a slam dunk. So again, I will attach my initiation because on Antero Resources, there's a big 3 or 4 year, I believe it's an ascending triangle. And here it is. No, it's a symmetrical triangle, both converging here. So we need this to hold, but if it can ever break out of this, we have a $74 price projection, and we're currently at 39, let's call it. So that's a heck of a lot of upside. So We kind of know where our risk is. I don't want to see this broken. I will go to a neutral if that happens. And one other thing, when I go down to a neutral, that does not mean that I don't like it anymore, but I'm going to bring that down to my minimum size. So if my maximum on an individual stock is 5 or 6% and my minimum is 1%, when I say I go neutral, I bring it down to a very minimum level, but I don't sell it all just in case it continues to go up. When I go bearish on something, then that would be get out of the whole thing. Okay, platinum. So, here was a big symmetrical triangle. This was 1, 2, 3, 3.5 years in the making. I tried to buy it here because of a rainbow convergence. I got stopped out. This is not the safe way to do it. I look at shorter term charts to try to do this, but as a novice or somebody that's learning, I would buy the breakouts. So I went to neutral with a small loss, and then I went bullish again at a lower level and rode this thing up until here and thought that was pretty darn good, up 75% in a very short period of time. And then it continued to shoot through to the moon. So, another tool I use is the Elliott wave theory. I'm not going to get into that that will be one I will cover though for you if you want to, to be a 3-minute segment, and you can skip over it if you don't want it. But here we go. We got I believe this is a third wave top. Third waves are the most intense. This is a fourth wave correction in the form of a bullish wedge, and it broke out of that a week ago or 2 weeks ago, and it's still outside. If we look at the short-term chart of this, here it is. So here's our buy, still outside of the wedge, and I see a small 5-wave advance here, and I see a 3-wave correction so far. So I'm going to keep my stop down here at 164. I don't love this. This is not working out the way I want it, but I'm going to stick with it. So that's where we're at on platinum. On silver, the same thing, exact same pattern. And I think here's my different trades in silver, bullish to neutral, missed a lot of it in silver. I didn't miss it in gold, but I did in silver. Correction, big third wave, fourth wave correction. Trends or cycles go in waves of 5. So I'm expecting one more higher high. We had no negative convergence. We had no bearish divergence on this high as third waves they normally are not. So I'm expecting one more higher high, which is a long ways up. Again, we got the same issue. Here's where I purchased, and I'm slightly down, but not a lot. This is a closer look at that. But, I'm going to hang in there with my stop. These higher rates are actually hurting metal prices. Anyway, that's a different discussion. So still hanging in there with silver. Caesars Entertainment, Caesars Palace. They got lots over in Macau and all over the world. And this is a inverse head and shoulders pattern. So here's the left shoulder, here's the head, and we're forming a right shoulder. Why did I buy it before it broke out? Because we have a bullish rainbow convergence. We broke up, the moving averages all came together, and we're holding in there. So I know exactly where my risk is. Whereas if I waited for the breakout, my risk could be way down here. So I want a better reward to risk. So if I measure from the bottom of the head to the neckline, you also have less volume on. See how big the volume was on the bottom of this head, meaning people were really selling it. On this right shoulder so far, we have little volume. That's saying that a lot of the sellers are out of it. People aren't interested in this stock, and that's what I like. This is down from 120 to 30. And if I measure from the bottom of the head to the neckline, I project that distance upward, I come up with 47. So we're at 27. So that's almost a double. Wouldn't that be nice? So, and my stop is at 24 and we're at 27. So I have about I don't know, 11% downside possibly. And the potential upside is um, is much higher. We got a 6-to-1 reward to risk. Now this was down today, and it's down this week, so I've been adding to it. Okay, this is one I'm really tempted to go on it to a neutral on, but I'm going to keep it going. This is the iShares Commodity Index. This is again 70% energy. So with this oil spike, oil's up 8% today, um, and I think it has higher to go, actually. It's not going to go in a straight line, of course. You know, this could correct 10, 15% in a couple of days. It's so volatile. But here again, we got a symmetrical triangle. Look at this is years, this is 1, 2, 3 years in the making. I just love these patterns. I'm not seeing as many of them anymore, these big ones. When we broke out, if you measure the base of that triangle and project it upwards, you come up with a $31 price projection, which we hit. I let it go a little bit longer. Here's where we bought. We bought down in August 31st at 22.77, and we sold that at on March 30th of this year at 32.58. It went a little bit further. See, these are pretty accurate a lot of the times, not all the time. And then it corrected, and I watched it bounce around, and I'm like, you know what, I got to get in there. And so we bought it back on the 8th of this month at, let's call it 31, and now we're at 34.56. So Elliott wave, 1, 2, 3, 4. I think we're in a fifth wave up right now, and we're starting to get it. On third waves, you don't get negative divergences usually, which we didn't hear. It's confirming that high. It's saying, you know what, there's more. This is way overbought. It's going to correct, but we want to get back in. And as I said on the call, when I went back to a buy, I felt there was another high coming and we would see a negative divergence here. And that's what's showing up right now, which makes me really nervous. And that's why I'm also going to a neutral. I'm not going to a neutral on this yet, but I will be. If you own it, you better be selling some on these up days. But Brazil looks like this too with a negative divergence. And I'm not going to play around with it because there's a lot of things, other things that have a better reward to risk at this point in time. So reward to risk is really important. When I buy it here, I have a very small risk level. When I'm buying it up here, where do I put my stop? It gets dicier and less attractive as it goes on, and people get more excited about it, and people are overly bullish on it, and that's when you kind of want to step aside. But I still think there's more in Brazil. I just don't know when that's going to be. But, we have a negative divergence here as we hit these higher highs. We have lower highs. It's flashing a caution sign. Beware, a change of trend is coming. So I'm going to go to a neutral. I know I'm going to regret it, but I'm going to do it because there's some other things I want to initiate with that are more attractive. And here's Union Pacific. This again, monster pattern, 1, 2, 3, 3.5 years. Big, I would call this a symmetrical triangle, A, B, C, D, E. You need the touches. You need 5 touches to make this a triangle. And this is not textbook because this last touch was way above. But that shows me a sign of strength. And so when it came back down, it gave me a chance to buy at a lower price. And so here's my stop. I raised it from 242 to 247 because of this big spike last week. Our price projection here is 335, and we're at 265. Again, if we hit another higher high and we get a lower high here, I'll be I'm not going to squeeze out 335. If it gets to 300 or 310 or 20, I could be exiting this. But that's kind of how I like to do this. So I hope you enjoyed that. Any comments on, the first patterns at the beginning? If those were helpful, please like and subscribe. Tell your friends, neighbors, families. family. Have a great evening. Adios.